Hello, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I love talking about chart patterns, moving averages, and being in the now. I'm a day trader and a scalper. I very seldom swing when we're at these high levels unless I see an opportunity. But here lately I've just been scalping mostly the SPX and the SPY and a little bit of the IWM. And I just call out different trades that I see that might have good setups. So let's get right into it. I like to talk about chart patterns. We've got a couple chart patterns we're going to talk about today, and also a few candlestick patterns, and these are going to be done in two major time frames, the 5-minute and the 1-minute. I've been criticized for using the 1-minute time frame, but in the 1-minute you can get a lot more trades out of the day than you can in the 5-minute. And I'm going to show you a couple examples of that. And that's why I flip back and forth to different time frames. I use the weekly, the daily, the hour, the 15-minute, the 10-minute, the 5-minute, the 1-minute. And the more confirmations I get in these time frames, the better off I feel about taking the trade. So this is a chart that I go by that I studied real close and got to learn real well. And I got it memorized. And it's just good to have you a nice little cheat sheet where you can learn, take time out every weekend, study a certain pattern, and then build up that foundation to where you can have you a good trading career and a very high successful rate. I didn't lose one trade last week, and I did lose one. No, I did not. I didn't lose one trading week last week. One trade last week at all. I waited a few of them out. I got stuck in a couple, but by the end of the day, it paid off. So this is the Trend Spider platform that I'm going to be using part of the time, and then I'm going to use TOS out of Schwab for the other half. This is a 5-minute chart, and this is just for Friday alone, October 17th, and let's get right to it. So I'm going to clean this up, but we had us a falling wedge here. We had a triple bottom. We had a double top, and we had a triple top right here. We had a nice little run off that fallen wedge, came back to a double bottom, and then we came back up to a top again and had a good run into the end of the day. So let's get right to it. We're going to clean this up, then I'm going to draw them out for you. Remove all SPX. Yes. They're all gone. So this is the 5-minute chart, 5-minute time frame, and the opening bell came in right about in here. We had a nice little run up to the upside, and then it came down to what you would call a double bottom. And we're going to draw that trend line in here right now. I use the body of the candles. So we had a double bottom right at open. We had 3 white soldiers that come up right in here. You can see it already colored in. 3 white soldiers is a bullish pattern, but usually after that third soldier, they like to kind of consolidate. Sometimes they'll just go sideways and bounce on up. In this case, it came back and did a double bottom. And that was the time to take this trade, and I called this trade out. And then it ran on up. And we'll expand this out a little bit. And you can see it was getting close to this resistance level up here, and we had us a double top with that wick from the body of that candle. So like I said, I used the body, and it had a little double top right there. And then we started to form a wedge. So that's an exit idea. A double top is an exit idea. It's a bearish pattern. Double top is a bearish reversal pattern that occurs at the end of the uptrend. Usually resembles an M. The pattern suggests that the uptrend has lost momentum and that the downtrend is likely to follow. So always look at that double top, double bottom. As you can see, most of these double tops have a little pullback. They consolidate, look for another opportunity to take the trade. Double top, pull back to a double bottom, and maybe it would reverse here up to the double bottom. There's your neckline of the double top pattern. Sometimes they go ahead and fail once that neckline. So it's good to learn, and always when I see a pattern, I'll go to Google and I'll Google in double top and I'll look at these patterns and get some kind of idea. A double top is an extremely bearish technical reversal pattern that forms after the asset reaches a high price 2 consecutive times with a moderate decline between the two highs. And then it could come down to a double bottom and then break the triple top. And triple top again is another bearish indicator. But sometimes, depends on the time of the day and what kind of market you're in, you could have a triple top breakout, same as a double top breakout. But usually you'll see some kind of consolidation, or you'll see a modest pullback, and then you can get back in the trade and run it back up to the upside. So we had double bottom to double top for the exit idea. Then we formed a wedge, and you can see the wedge starting to form right here. So you want to take your trend line, using the body of the candle, run it up to the next body right there. See how all the bodies hit each other? Body, 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 body. Same as right here. Oop, gotta come up here. You have what you call fallen wedge. Now on this double bottom, if you extend this out, you have what you call triple bottom. Using the body, and then you have that wick touching right here. And then it formed a hammer. So you have a triple bottom. And there's your wick touching that third bottom right there, giving you a triple bottom. So triple bottom is also in that chart pattern thing right here. You got a triple bottom, then you get the big breakout. You got a double bottom, you get the big breakout. So they also had a hammer right here. A little hammer, and it extends on up to 3 white soldiers. 3 white soldiers is what you had here. So you got to think, if the thing going to break out, you want to watch that next candle and see what kind of candle appears, and you had a spinning top, and it held above that body of that candle right there. Now bodies are very important. Now a lot of traders won't tell you the bodies. They talk wick, you know, they'll talk about the wick, but the bodies can tell you a lot, and they seem to coincide a lot together, like a body here and a body here, a body here and a body here. The wick went down below. The body here and the body held above the body here. The body here held above the body here. The body here held above the body here. So telling you that that thing's still bullish. And then it ended up coming to it. You had a, let me see here. You had the double top, and then it come up to a triple top. So you extend this on out, and then you got the body with the double top, and then to come here with the other wick, and you had a double top. So I use the wicks as a confirmation, and I use the bodies as an indicator. So we had 2 confirmations that we had a triple top, and then we might pull back. And that's exactly what we did. A triple top is the same thing as a double top. It's a bearish indicator, or it's a consolidated period. So we had another fallen wedge right here. So after we got out of the trade, of the triple top, and we bought it down here at the very bottom of this triple bottom, we had another wedge. And we're going to draw that wedge in. And this is all on the 5-minute time frame. So I want you to get used to these 5-minute time frames. We had another wedge. We went body, wick, and it broke out. and this is part of the sneaky snake trading strategy. Broke out and it came back, and then I recognized a double bottom. We had a double bottom right here. So you had the two bodies, tweezer bottom, and then it came back, held support, tweezer top, came back down, and then you have another hammer. Just like right down here where you had a hammer. So you had another hammer right here. So you got a fallen wedge. That's two fallen wedges in one day. You don't take many trades to do well when you're trading the SPX. So we got out at the double top, created a fallen wedge, we broke out, and then we came back. And it depends on the time of day. Now I'm telling you, the time of day means a lot. It does, because you have the scalping period between 9:30 or 9:30 Eastern time to 11, and that's when I get all my scalping done. Then I kind of take a break, go have a lunch, play a song, sing a tune, relax, and meditate, and still watch the charts in case we have a continuation or we have a consolidation after that period. Most traders will take that first hour and a half and leave, and they're done for the day. I've been sitting here for 21 years, every single day, for 8 hours a day, watching the market. So, I'm kind of immune to it. We had another fallen wedge with a double bottom right here with a hammer. And we had the breakout, pullback, boom, all the way to the upside. So I'm going to pull this back. Now, if you notice, this is a heat map that's on TrendSpider, and we started getting in that heat map where she's consolidated. We had a little thing, and it pulled back, and we had another double bottom right here at the end of the day. But I was done by this time. After I traded this trade, I kind of relaxed, let the time go on, and here it is the next day on the 20th. So that's the 5-minute time frame. Again, I'm going to just kind of do a little summary of what happened here. We had 3 white soldiers into close on Friday on the 5-minute, on Thursday. She pulled back to a double bottom, broke out to a double top, created a wedge. We had a triple bottom with a hammer. Then it had a parabolic run to a triple top, exit the trade, created another fallen wedge. Get out before other people think about it. If you're able to read charts and read patterns and read moving averages, you can get out of these trades a lot sooner than other people can. See, we have the 200 SMA right here. So I knew that was about time to get out, along with that triple bottom. And then we had another fallen wedge with a double bottom. Then you could have got out here at this triple top and sold it right there and took your profit and run and got out of that trade right into close. So this is part of the strategy on the 5-minute time frame. Now I'm going to show you some different trades on the 1 minute. How many more trades? Like here we could have took 1, 2, 3 good trades and been done with it on the 5-minute. Excuse me. So now we're going to look at the 1 minute. So this is right at open. I like to, sometimes it depends on what this is telling me, but we had a tweezer bottom at open, and I called this little trade out. I said, we got a tweezer bottom. We could run up to a double top. So there's your double top right there. You got your double top. So you know to get out of that trade or to watch, and maybe we're going to have a pullback. So I get a knock on the door. Hey, Jim, we hit a double top. Friday's high right here into close. Okay, if you're in the trade, take profit or scale out. And then we came back down and did a double bottom at open. So I'm going to open this up just a little bit more, and I'm going to see what happened here. Oh, we got a triple bottom down here. So I'm going to run that price line. Then we got us a triple bottom. So we got a triple bottom, double bottom in the day. You can run that double bottom right there. Double bottoms don't have to be perfect. You know, I've had a couple of people criticize, like, hey, you don't know what you're talking about, man. They don't have to be perfect. This is a new day, so we've got a double bottom right here. And we got out of here at the triple. This is almost a triple top right here. So you knew you were coming up to a resistance, even by that indicator right there, to get out of that trade with a tweezer top. That's another indicator. Tweezer top is also a sign that you might be selling off. So we had the breakout. You got out of the trade maybe here at the double top, or you held on. And let's see where this takes us to. Right over here. See that? You got a double top right there, from right there to right there. Again, they don't have to be perfect. You know, I want to make that perfectly clear. And we're going to hold that on there. We're going to leave that on there because you can see we came back up here after we had this fallen wedge. So here's another trade that I called out. I called this out at the 200. I said, if they didn't take this one, they didn't get out, they had another chance to take another trade. So we've had 1, 2, we had a triple top right here to get out of the trade, unless you run it on up. But if you got out here at the triple top, you were out of the trade. So that's 2 trades already within the first 10, 20, 30, less than 30 minutes. And then it came back down again with these crows and hit the 200 SMA. These are moving averages. And I like the 200 SMA. You see how it respects the 200 SMA as you go across. So you had a pull back here with a tweezer bottom. So you had the 200 SMA with these parabolic crows with a tweezer bottom right there. And then it runs up and does a triple top or a double top. You could have got out here at the double top off this here candle right here and got out of the trade and took your profit while everybody else is still in stock. Then you had 3 white soldiers right here. But you don't know what the next candle is going to bring. You know what I'm saying? That's why I get out and I can scalp this many a times in the daytime period. So we've had 1, 2, 3 trades already. Then we pulled back. If you missed that, you could have extended this line out here and hit this support from this here double top right here, and you would have had a nice support and run it on up to that triple top. So that's 1, 2, 3, 4 trades that you could have took. Here's trade number 5. So after it hits the triple top, it comes back and hits the 200 SMA. There's another call out right there. The 200 SMA to the 63 or to the, and that's probably a $20, $30 run right there. And if these options are cheap enough, $1, $1.50, you get 10 of them, spend $1,000, and you can get out of that trade and make a couple $100 in less than 2 minutes. Then we had an inverted hammer. It also came back down and did a head and shoulders. So you had a head and shoulders on the 1 minute. And then you run it up to the 50, or you run it up with these 3 white soldiers and get out of the trade after the 3rd soldier. So that's 5 trades. Then you have a fallen wedge. So you look at your fallen wedge as you run this side up. Then you had another trade right here. You had 3 black crows. So you had 3 black crows. This is trade number 6. See, I've already almost doubled the amount of trades that I did on the 5-minute. And then you look at the indicators next to it, and you got a hammer right here. So you see the candles are getting smaller. And then you got a hammer right here that's telling you it's bullish. You got a double bottom off the wicks. You got a tweezer bottom right here. And then you got 3 white soldiers up to the 200 EMA and the 63 EMA, and you get out of the trade. You almost made your money back in 3 or 4 minutes, another 40, 50 bucks a contract, and you're out of the trade, or it runs up and hits the 50. Then you got a double top. If you want to extend that out and you don't sit and you miss it for a second, then you got your double top right here. I'm telling you, there's all kinds of trades to be made. So you got your double top, and you got your head and shoulders. There's your head. You got this left shoulder, right shoulder, right shoulder. So that second right shoulder, you know to get out of the trade. Tweezer top, you know to get out of them trades. Then you got a falling wedge. So you got a falling wedge with a triple bottom. 1, 2, 3, 1, 2, 3, breaks out, runs up to the 200, continues on up to that resistance line. And that there was probably a $200 or $300 a contract trade, maybe 4. Runs all the way up there. Then you got another fallen wedge. After you get out of the resistance line that you saw, the triple top, 1, 2, 3. So we got what? 1, 2, 3, 4, 5, 6, 7 trades already, and it's not even been an hour. It's been almost 2 hours in the day. And then you have a fallen wedge. So 1, 2, 3, 4, 5, 6, 7 trades. Once it breaks out of that triple bottom, and there's your 7th trade. And then you got another fallen wedge right here. One, 2, 3, 4. 1, 2, 3, 4 wick, and then it breaks out. So you know, okay, we broke out of the wedge, came back and held support. Boom! So that's trade number 8. And then you had a head and shoulders. You had a head and shoulders right here. Left shoulder, right shoulder, came back that second time. And I talk about the inverse head and shoulders. I say, you know, always wait for that second pullback. And if you were sitting here watching that and you'd paid attention, there's trade number 9. All the way up to that trend line again and get out of the trade. So that's probably $100 a contract right there. 60 bucks a contract. So that's trade number 9. That's triple of what you would have made on a 5-minute. Then you came back and respected the old triple top. That's trade number 10. Run it into close. So I'm just saying the difference that you can do within a 1 minute, if you learn how to read the 1 minute candlesticks, to where you read, if you're using the 5-minute, the bigger the time frame, the less trades you're going to get. And if you get to like an hour or you get a daily, you could be doing swing trades, and they'd go longer. So that's the difference between the 1 minute and the 5 minute. We still had the two falling wedges. We had double bottoms, we had triple bottoms, we had triple tops, we had double tops, we had triple tops, we had tweezer tops. On the 1 minute, we had an inverse head and shoulders. But after you start studying them, go over and over and over on them, you'll get more of a liking of how they read. And every chart tells a story. And using moving averages, candlesticks, you could read a lot in a chart. Now I'm going to give you my moving averages right here for right now. If you want to go ahead and get your pencil and paper out, I'll read them off to you, and then it's going to be the end of this story. The end of this here video, the end of this lesson. And then we'll go over the 5 minute one more time. So on the EMAs, I have the 9, which is in blue. I have the 21, which is in white. I have the 63, which is in red. And I have the 200 EMA, which is in a dotted yellow line. And on the SMAs, for the Golden Cross and the Death Cross, I have the 50 SMA and the 200 SMA. Then I have my RSI. So let's go over that one more time. EMAs, I have the 9, which is in blue, the 21, which is in white, the 63, which is in red, and the 200, which is in a dotted yellow line, and then the 50 SMA, which is green, and the 200 SMA, which is a gold or an orange. And they're like that on all my charts. So we had triple bottom with a fallen wedge with a hammer. We had 3 white soldiers. Pull back to a double bottom for the first play of the day. And then we had the fallen wedge. And we had another fallen wedge with a double bottom. This fallen wedge had a triple bottom. This one had a double bottom. Each of them let out with hammers. Once it broke out, you see what kind of pattern you get after that, unless you just jump on in because you know that's a pretty strong breakout, and you hold on and get out at the double top or the triple top. Once it did the triple top, it created another pattern, fallen wedge to a double bottom, and then you're off to the races. So this is the Sneaky Snake trading strategy. I'm Washboardjim, where I talk about chart patterns, moving averages, and being in the now. And have a great day.